After reporting earnings, FICO is down by over 10%. Now, this stock has given you a 3x return over the last 5 years, and the expectation for a lot of investors think that this could be repeated for the next 5 years. So we're going to do a stock analysis and see if that is possible or something that we should avoid. Now, we're just aiming for a 2x return, but if it can do a 2x return very comfortably, then it should have no problem giving us a 3x return over the next 5 years. First, we're going to do analysis of the stock and get a stock price for 2030. And then I'm going to give you my thesis, whether you should buy or skip the stock. These are FICO's current metrics. For us to get a stock price, we need to evaluate / hypothesize what these metrics could be by 2030. So let's go ahead and start with revenue. So 5 years ago, it was making 1.15 billion in revenue to today making 1.7 billion. Now, I want you to understand something that's pretty crazy. Majority of its revenue gain, I'm talking about 500-600 million, came in the last 6 quarters. Before then, you could see its revenue was only growing by a single digits, 4%, 7%, 7% again, 3% one quarter, 4% one. And then as soon as June 2023, it shot up to 14 and it kept above 10% ever since then. This tells me there is a positive catalyst that is skyrocketing its recent growth beyond its normal trend. So I'm going to develop a thesis and say this catalyst is going to skyrocket its growth even more over the next 5 years. Now that we have a general thesis, let's go ask ChatGPT what are analyst projections and what is the estimate that it can derive from analyst projections. So analysts are projecting 2.1 billion in revenue by the end of this year. If we go based off of historical trends and future analyst projections, ChatGPT thinks this company can have 3.7 billion in revenue, which is possible. We were seeing a massive positive catalyst here that was skyrocketing its growth beyond the normal trend. So I can see this catalyst pushing its growth even further in the future. I think it can even go a little higher. Now, when we ask Gemini, it thinks 3.02. I don't like that number. I'll be honest, I think that's a bit too low, but it is taking into account a slower growth rate for 2028, 2029, and 2030. When we act, it's saying 3.5 billion. This is based off of market maturity and competition. It is saying that most analysts project a 3.6 billion in revenue by year 2027, which again is very possible. That would mean an additional $1 billion in revenue over the next 3 years. Pretty solid. When we ask Claude, its revenue projections are just laughable, I'll be honest. I mean, it's saying 2.8 billion. It's expected to hit these numbers as soon as 2027. So I'm not even going to take this thesis into account. In my personal opinion, looking at the trends, I think it can do a little bit higher. So I'm going to say it's going to have a growth of 125% over the next 5 years, which is a revenue of $3.8 billion by 2030. When we take a look at its number of outstanding shares, it was 30 million to today being 25 million, which is a decrease of 16%. That means it provided 16% of additional value to its shareholders. I don't see why it can't repeat that over the next 5 years when it's going to have higher growth and higher margins. So I'm going to say it's going to do 16% of stock buybacks, giving us an additional value of 16% over the next 5 years. Next, we're going to try to estimate PE. When I take a look at the PE of this company, every time the market stabilizes or its growth slows down, it comes back to 30 every time. Very rarely does it maintain this 40, 50, 60 PE for extended period of time before it consolidates again. So we're going to be a little bit conservative and say that it can have a PE of 32 by 2030. Now, this could be a bit too conservative. It could still have this sentiment and have like a 40, 50 PE, but I don't see it having an 88 PE that it has today. That's just too crazy. The sentiment around the stock is way too high, so I don't think that type of sentiment will stick for that long. And lastly, we need to figure out its profit margin. Its current profit margin is 29%. But if you take a look at the charts, it's been increasing its profit margin every few years. It used to be 10, then it turned to 15, then 20, then it went all the way to 32. Recently, it's been doing a lot of AI related spending, so you see it consolidate a little to 29, but I expect this to re-accelerate, and I'm gonna say that it's gonna hit 40% profit margin. You also have to understand this is a very capital light business. That means once they spend, it just generates revenue, and they have to do very little spending to continue to service the product. So 40% is not that unreasonable for a business like this. When we enter all these metrics in, we get a stock price of $2,300, meaning if you were to invest that same money into the S&P 500, it would give you $2,600. We are underperforming the S&P by 15% if these metrics play out the way they're analyzing. Now, I'm going to give you guys a bit of an honest opinion here. I think this company can surpass 5 billion in revenue, which means about a 200% growth in revenue over the next 5 years. If you were to take that metric in, then we are doing 30% more than the S&P 500. But still, we're not hitting our metric of 2x. Even with this bullish view, we're still not hitting our 2x margin profit. For us to get to a 2x margin profit to beat the S&P, we need to buy this stock at 1570. Now, in my honest opinion, this is a very good business, and I think you will beat the S&P 500 by investing in this company over the long haul. Now, I am going to be transparent and say that this business will have some rough turbulence over the next 1 to 2 years because it is selling at an extremely high multiple, which means it's going to have extremely lofty expectations for profitability, revenue, and even guidance. Anytime it misses any one of those, you'll see massive consolidations like you just witnessed very recently. These are going to happen more often in the near future because it's such a high multiple. Another thing, it can actually far exceed even 5 billion in revenue. This is because there is no clear path on how big the data business of FICO will be. I am telling you, once they develop this API and it starts to use massive adoption, this API alone could contribute to like 5 billion in revenue. So it does have a positive catalyst on that end. If you look at it, their API business is a huge mystery. And now I personally don't understand this line of work, so I'll be avoiding this stock. But if I did and I understood it really well, I would take this chance on this stock. But I wouldn't buy it yet. I would wait for a minor consolidation. It was selling for about 1670. That was a time to enter. Now it's back up to 1800. Not the time to enter yet. I feel like we're going to have a minor consolidation again. Once it hits that 16 again, I would enter. But there is a lot of uncertainty around its data business and how it can impact its revenue. Personally, for me, I would take that chance because it seems as though this could be something that ends up being a massive positive catalyst for FICO. But I want to know what you think. Do you guys like the stock? Do you guys hate the stock? Are you going to buy it? Did you currently purchase a stock and sold it when there was a scare in the market? Whatever it is, comment below and let me know. And please like, follow, and subscribe.